So today's video, I want to talk about Stanley Druckenmiller, which is someone who fascinated me from the first time I learned about him. And if you don't know who he is, he's a billionaire investor slash trader. Basically, one of the best. He's top 10 in the world. He's up there with Warren Buffett, George Soros, Jim Simmons, Stanley Druckenmiller. He's one of the best to ever do it. So he did an interview on YouTube, and I actually learned a lot from that interview, and I decided to just compile what I've learned and share with you guys on here, because I'm pretty sure that you as a trader can relate to most of the stuff that he said in this interview. So I wanted to share it so you can understand what happens in the mind of a billionaire trader, right? Without further ado, let's get into the video. So one of the first things that he talked about from a psychology perspective was how he deals with losses. And yes, even someone who makes billions from trading, they lose they lose a lot and they enter drawdowns. So he mentioned that whenever he enters drawdowns, he feels upset. You know that feeling when you're entering drawdown and you just feel like quit trading, you just have a bad feeling, you don't want to talk about it with anyone. He says he goes through those stuff as well, but he has a certain amount of confidence because he knows that over time, as long as he do what he needs to do, he will have a clean slate. So he will get out of this drawdown. And the way that you get out of this drawdown, obviously, is by sticking to your strategy. If you know that you have a strategy that works over the long run, when you're in a drawdown, you just need to keep that in the back of your mind that, hey, a drawdown is normal. It will happen. You just need to stick to your strategy, right? And this leads him to have self-confidence, so whenever you're in that drawdown, we know that you can get a lot of lack of self-confidence. You're not really taking trades again and you just feel horrible, so you just stick to your strategy and just believe that over time things will get back to normal. And obviously this concept is called regression to mean. So with every strategy, you'll have winning streaks, but it will come back to being normal. And it's the same, you'll have losing streak, but it will come back to being normal, which is called regression to mean. So that's how he mentioned that he deals with drawdown. And this is probably something that most traders know, or most traders are aware of. But when you realize that someone who is as successful as Stanley Druckenmiller, who over 30 years, he has a track record of 30 years with 0 down years. So for 30 consecutive years, he had no negative year. He finished positive on the year. So even someone like that goes through drawdown. So who are you and I, as a regular retail trader, to think we cannot go through drawdown? So it will happen. And when it happens, just stick to your strategy and have self-confidence. Right? And the next thing he spoke about losers was he's quick at getting out of losers. As you know, a lot of people, I hope if you're watching this video, you aren't really one of those guys who don't use stop losses, right? So if you have your stop loss, you just need to keep your stop loss where it is. Don't remove your stop loss and say, oh, you know that this market is probably going to go up, so you're going to keep your buy on even though you're losing. When you're losing, you should actually feel the need to get out of that loser. So this is kind of the mindset, and a mindset that I've adopted years ago. But nowadays, I just set my stop loss. I don't move my stop loss to break even. I don't move my stop loss. Once I'm in a trade, I will either win the trade or lose the trade, unless there's some news event. So I just move my stop loss to break even. So if the market pulls back on a news event, I just get stopped out for break even. But do not let losers run. Just get out of losers once you see that you're wrong. And again, this just comes from being open-minded, having humility, and accepting when you're wrong. And he mentioned here that my record is good because when I am wrong, I change my mind. being wrong does not reduce credibility. And this is so common in the trading community. If someone shares an analysis and it turns out that their analysis was wrong, people think that, oh, you're not credible. How were you wrong on this? First of all, most people in the market, they have about a 55% win rate. So that means that any trade idea that they share, there's a 45% chance that this trade will be a loser. So being wrong does not reduce credibility. Everyone is wrong. It does not matter who you are or how good you are. Again, this is coming from a billionaire investor, right? So he mentioned that about getting out of losers and so forth. So when it comes to losses, you're going to enter drawdowns. You just have to stick to your strategy and have self-confidence that this will be over soon. And losers, get out of losers, man. Stop letting losers run. So that's Stanley Druckenmiller advice on dealing with losses. Next, we want to talk about risk, which is really important. And Stanley Druckenmiller, he's a friend of George Soros, and you know that George Soros, he has a very, I'd say, unconventional view on risk. So here's Stanley Druckenmiller's view on risk. So similar to George Soros, he has the philosophy of betting big when you have conviction. But for retail traders like myself, I'll be talking about how you can approach this differently, actually, because we don't really have the resources and the team like Stanley Druckenmiller to actually do this, where he says bet big. I should put this in bold because he really emphasized that. But as retail traders, you need to twist that a bit. But this is his trading philosophy. When he has a high conviction on a trade, he risks more on that trade. So he made over $1 billion on a trade, and this was in, I think, 1987 with the collapse of the UK pound or something like that. I don't remember exactly, but he made $1 billion on a single trade. Well, actually not a single trade, but a single trade idea, right? And we'll actually talk about how he made $1 billion on that a bit more. So this is where this philosophy comes from, right? So I can bet in the years like 2008, 2007, this guy, during market crashes, Stanley Druckenmiller and George Soros, these guys, they tend to make the most money because this is when they bet big, right? And this, it requires skill, right? To make $1 billion on a trade on a market crash, you have to be really skillful to predict something like a market crash like the 2008 recession, or what happened with long-term capital management, or any sort of crash in the economy. They rarely ever happen. Those are tail risks. Those are really, really hard to predict. So I don't try to do that. That's not my approach. I do not try to predict a market crash and then bet big, because you will end up losing a lot. If you're George Soros or Stanley Druckenmiller, you can do that. But as a regular retail traders, this is how you can apply this. Matter of fact, this is how I apply this. So first of all, you need to journal your trades, right? And when you journal your trades, you can get the probability of your setups. Matter of fact, I'll head into Google Sheets here and show you exactly what I'm talking about. So here I have this trading journal, and I actually have a video on this where I share this exact trading journal template on my channel. So if you want it, you can get it. So here I have my trading journal where I record all of my trades, and I have this column right here, which is confidence, and right here it measures my confidence. So whenever I place a trade, I rank it from 0.1, which is the lowest, to 1. So that is my conviction, the highest. So like a trade like this where I have a 0.8 conviction, this translates to 80. So this means that I was 80% confident in this trade. Here I was 30% confident, and you can see that most of my trades, I am 50% confident on most of my trades, right? So once you chuck all of this and have enough data, I have this section here where I'll right here. So I created a pivot table, and if I zoom in a bit here, now I currently don't have enough data to make any insightful analysis, but here you have the different win rate at your different confidence level. So what's important here, and I actually add something else to add a bit of context. Okay, so I just added a third column here, and this is the count, just to add some context. As mentioned, I don't have enough data to get any insightful analysis. So you can see that I have a column for confidence, win rate, and the amount of time the amount of trades that I took at this confidence level. So you can see that when I have a 50% confidence level, and I can change this to percentage so it's better. So whenever I have a 50% confidence level, I've taken 27 trades at this confidence level, and my win rate is 51.92%, which is about in line with the confidence level. So when I'm 50% confident, I have a 51.9% win rate. So that means that I should just bet normal whenever I have a 50% confidence. But you can see that when I have a 80% confidence, so when I'm 80% positive that I will win this trade, 85% of the time I actually win. No, this is only with 7 trades. So I mean, that's not really enough data to get any insight. But if I took 7 trades and I won 85% of those trades, this is giving me some sort of insight. This is saying that, hey, you're doing something right here, right? So whenever I have a trade and my confidence level is at about 80%, instead of risking like 1% per on a trade, I can risk maybe 2% or even 3%, because 85% of the time I'll win that trade. Whenever I have a 60 confidence level, you can see that I've taken 2 trades and the win rate is currently 100%. Again, it's not enough to come to any solid conclusion, but if let's say I took 30 trades and my at a 60% confidence level, and my win rate was 100%. Whenever I'm taking a trade and I feel 60% confidence, this would tell me that I need to risk a lot, because every single time I enter a trade and my confidence level is at about 60, I win that trade, right? So this is how I measure my trading stats and my trading analysis, similar to Stanley Druckenmiller, as he says, bet big when you have conviction. So if I have a 80% confidence in a trade, that would be high conviction. So I would bet big. And I have the record to show that when I have a 80% win rate, I tend to win a lot more. So I need to risk more. So that's basically the idea. And believe it or not, this right here, after watching this interview, that's actually what inspired me to actually implement that in my trading journal. So yeah, that's about betting big when you have conviction. And he said this, which is also really important. It's not whether you're right or wrong. It's how much money you win when you're right and how much you lose when you're wrong. And that's so important, man. When he said this, I was like, that is just poetry. That is just modern day poetry. And if I head to my trade summary here, so far I've tracked 37 trades, which again, it isn't a lot, but I've tracked 37 trades, and you can see that my win rate is 55%. Now, win rate of 55% with 37 trade isn't bad. So what this is telling me that if I have a 25% win rate, a 55% win rate, and my total R is 15. So this is assuming that if I had risked 1% per trade on these 37 trades that I took, my account would have been up 15.85%. So the total R being 15 with a 55% win rate, that speaks about good risk management. I could have had a 45% win rate, and with my same risk management, my account would have still been up. So he says it's not about whether you're wrong or right, it's how much money you win when you're right and how much you lose when you're wrong. It doesn't make a lot of sense if when you're right you're winning say $200, but when you're wrong you're losing $500, $600, right? You need to manage that right there. Yeah, and that's just some more solid advice right there, and something that literally the things that I'm going through right now, I'm not just telling you, I actually apply what I got from that video into my own trading. So I hope you guys are taking these stuff into consideration and not just listen and actually apply them. And this is how he made $1 billion on a single trade. When you have a concentric theme, look around at other things that will be affected because of this theme and trade those as well. So let's say you anticipate that there will be some risk off trading. So a big event is going to happen and there's going to be a lot of fear in the market. You know that when there's a lot of fear in the markets, the yen tends to do well, Swiss franc tends to do well, gold tends to do well. So you can go ahead and purchase or buy or whatever or sell different things instead of just You believe that there's going to be a lot of uncertainty, so you're going to sell the Nasdaq. You could sell the Nasdaq, you could sell Hong Kong 50, you could sell the Australian dollar, you could sell the New Zealand dollar, because you know that when there's a lot of uncertainty, all of those are going to be affected as well. And that's how he managed to make this much money on a single trade, because instead of just betting on one asset, he made a bet on everything that would be affected on his trade idea. But again, this is something that I don't really apply that exactly, because I don't try to forecast market crashes and then profit off of those. You just have to have a solid team, good mentors, and you have to be very skilled to do that. So I don't do that, but you can take the concepts that you have and apply it in your own unique way. So yeah, that's about risk management right there. Some solid ideas right there. So next we have, how does Stanley Druckenmiller deal with FOMO and revenge trading? I want to add a reminder that we're not talking about a regular retail trader. We're talking about a guy who has made billions from the markets. We're talking about a billionaire, and a billionaire trader, he has problems with FOMO and revenge trading. So again, if you are a retail trader and you struggle with FOMO and revenge trading, trust me, you're not alone. This happens with every single person, right? So Stanley Druckenmiller, this is how he says he deals with FOMO. And again, I literally started to change my trading style after watching this video, and it's the reason why I trade the way that I trade now. Most of these things that I'm telling you, I literally changed how I trade and adapted to what he said. So right here he said diversify and have a lot of options of markets to trade. That's how I trade. If you follow this channel, you know that I trade currencies, indices, commodities. So I trade the USD, pound, yen, Australian dollar. I trade Nasdaq, DAX, the Nikkei, Hong Kong 50. I trade gold. I trade oil, I trade silver, I trade bonds, I trade everything, right? And I literally started to do this after watching his interview, because it's true, when you have a lot of options to trade, it's basically, you don't need to have any FOMO, because you know that if the currency markets aren't providing any trading opportunity, more than likely you'll see opportunity in indices. So you'll see opportunity in Nasdaq or the DAX or the Nikkei. Or if nothing is happening in currencies, nothing is happening in indices, you'll probably see opportunities in gold. You'll probably see opportunity in oil. And if nothing is happening there, you will see opportunity in bonds. So when you diversify and have a lot of markets that you trade, that really helps with FOMO. And I am telling you that this is 100% true, because that's what I do. After watching the Stanley Druckenmiller interview, I literally just started to practice how to be a multi-asset trader, and I have not regretted it so far. It has definitely helped with my FOMO and revenge trading, because my mind is at ease, because I know that if I miss a trade, or if I did not get a solid entry, or I made some stupid mistake, I know that a market, an opportunity will present itself either tomorrow or the next day or the next day. Knowing that there will always be opportunity in the market, it puts my mind at ease, and I suffer a lot less from FOMO. Matter of fact, I can't even tell the last time I placed a FOMO trade. Literally, I cannot tell the last time. It's been months since I placed a trade out of FOMO or I did revenge trading. Literally months, right? So this definitely helps, and if you can do it, I would recommend trying to learn and being a multi-asset trader. Obviously, it's a lot harder, but it definitely helps with FOMO, right? So it helps with FOMO and revenge trading, as mentioned here. So being a multi-asset trader, I'll definitely recommend. You'll suffer a lot less from FOMO and revenge trading, because you know that there will always be opportunities in the market either tomorrow or the next day. There hasn't been a point in time for months where I've gone 2 trading days and I have not seen a good trading opportunity. And I want to exaggerate on this because I believe that it's so important, and it literally transformed my mindset as it relates to trading. So a multi-asset trader, solid advice here, and something that I recommend. And then he gave a little story and how FOMO got the best of him. So his story, he actually lost $3 billion. So for us regular retail traders, maybe we gave into FOMO and we lost $400 or $500. In Stanley Druckenmiller case, he gave into FOMO and he lost $300 billion. And because of this loss, this $300 billion loss, obviously that would affect anyone. He took 4 months off from trading. He said he went to some place where he did not have access to any news. So no CNBC, no Bloomberg. He did not hear anything trading related. And then he came back, and this gave him a clean mind slate. It lets you see things from a different perspective, because sometimes as traders, we're just always in the markets, always thinking about the markets. But, sometimes taking a break, ironically, it can actually lead to more profits, so this was a story he spoke about, and he was about to have his first losing year, but he came back with fresh eyes and caught an amazing trade that no one else saw, and his fund was up from minus 17% to 40% on the year. So that was a nice story that he gave during the interview. It was really inspiration. I've taken 1 day or 2 days off from the markets, but I don't think I could take 4 months off from trading. I'd probably go crazy, but every now and then you can take a day, 1 day break or a 2 day break from the markets, or if you can take a 1 week break. And when you come back to the markets, you can really have a clear and open mind and just, have better trading. So that was some solid advice here. And then he got asked a question about some advice for young traders or investors, and he said, love the game for the passion. If you're in it just for the money, you won't make money. And I don't think I even need to expound on that. If you are trading, you should love trading. If you're trading and you just want to get rich, you just care about the money, you're not going to make any money, so you have to love trading for the passion and not just for the money. So find a mentor and bug the hell out of them. And that's exactly what he said, word for word. And I know that not everyone can afford a mentor. Not everyone can find a mentor or get access to someone who's into trading and, have more experience than them and can teach them. But we have the internet, so you can probably find some guys on the internet that you can, basically consider a mentor, even if you don't interact with them, but you can watch and learn from them. And here I had Paradox, trading is more than just money. So yeah, trading is more than just money. It teaches you how to be disciplined. It teaches you self-awareness. It teaches you about risk management. It teaches you how to research and all of that stuff. So this is what trading is about. If you just head into trading for money, you're not going to make it, because you have to master these skills. These are non-negotiables as a trader. You have to be disciplined. You have to be self-aware. You have to have solid risk management, and you have to know how to research, backtest, and all that stuff. And all of this should get you excited, right? And if you're probably watching this video still, hey, kudos to you. I don't know why you're still watching this. I'm just yapping away. But if you're still watching this, you probably love trading. You probably get excited with trading. And yeah, you should, I get excited for trading. Trading is my passion, and I'm glad the day that I found and learned about trading. I love trading. It genuinely gets me excited, So that was his advice there for young investors. And yeah, that's about it. That is about it. That's the main things that I got from the interview. I hope you guys don't just, if you're still here, I hope that you don't just watch this video and then close it off, because you'll probably forget about everything. Get like a notebook, like a Google Docs, and write down some of these stuff if it's stuff that you want to apply, and then actually apply to your trading, because knowledge is not power. The application of knowledge is power. It doesn't make any sense you have all of this knowledge, you watch all of these videos, read all of this book, and you're not applying what you're learning. So if you watch this video, take some notes and apply to your trading, right? All of this stuff that I'm showing you right now are things that I literally apply to my trading. Bet big when you have conviction. I have my spreadsheet that I just show you where I track my confidence. Being a multi-asset trader, this is the reason why I trade indices, currencies, and commodities, because it helps with FOMO, it helps with revenge trading. So all of this stuff right here, apply it. Don't just watch this video and then go about your day. Yeah, I've been yapping for a very long now. This video is probably about 20-25 minutes or even 30 minutes. I've been talking for very long. So I mean, that's about it for the day. I really appreciate Stanley Druckenmiller. He's an amazing guy and obviously a great investor. So I hope you got some lessons from this video, and I hope you apply the things that you learn from this video if you found them valuable. Don't just learn them, and make money and enjoy making money. So yeah, that's about it. Peace and trade safe.